Hey guys, welcome back. I hope you had a really great day trading today. So today was Monday, September 30th, and we had Jerome Powell speaking at 2, and today was a really fun day, and I say that somewhat disappointedly because absolutely none of my orders filled today. And SPY this morning started with a gap down to open, and then we came back up to the 35 EMA, and right here Jerome Powell spoke, and the initial reaction was for the market to drop. We got almost down to the bottom of the implied move. And then you can't see it here, but if you were watching Stupid Willie today, we actually got an oversold signal right here. So once we hit oversold on the 30-minute time frame, we did reverse back up and we came all the way back up to just under all-time highs. And we saw the same thing over in SPX. We opened with that same gap down and then came back up to the 35 EMA, saw that level as resistance leading up to Jerome Powell speaking at 2. And then from there, we did see a drop. And if you were watching Stupid Willie, we did get an oversold signal right here. And we took it from oversold all the way to overbought by the end of the day. And we took it from support all the way to resistance. So this support right here, which was just above the bottom of the implied move, was from back here where we filled this small gap right here. That turned into a support that took us higher. Today, that is right where we reversed, and that was right at the bottom of the implied move. And then from there, we took it all the way back up to the first resistance level, which is where we made all-time highs last Thursday. And that didn't take us all the way to the top of the implied move here, but it did keep us within the channel that we have started trading since last week. So SPY did close up 0.40%. SPX closed up 0.42%, VIX down 1.36%, and both SPY and SPX, we did stay completely within the implied move. And then taking it over to QQQ, we did close last Friday underneath the 35 EMA, and as we started trading today, we did stay completely underneath that 35 EMA. You could see we did drop down to this level, which was actually an interesting resistance. I'll zoom out in just a second to show that. But we did bounce on that level, came back up to the 35 EMA, got pushed back down. This right here is where Jerome Powell started speaking. The initial move was down. We took it almost all the way down to the bottom of the implied move, which was 482. And here also, if you were watching Stupid Willie, we did get an oversold signal right here before reversing, and we didn't quite take it to overbought, but you could see it's pretty darn close. So today we did have a fight at this level, the 485. I'm going to zoom it out a little bit further here and show that level. And that is right here. That has been resistance for almost 3 months, about 2.5 months now. Over here, it was guarding this bear gap. We recently did get into that bear gap, but we got pulled back down to this same resistance level. So 485, maybe even 486 we can call it, is definitely a level to at least have on your chart and know about because it has been a previous resistance. Almost for the whole third quarter, which we did just close out today. So in QQQ, we are in this really interesting place above the bull gap from FOMC and underneath the bear gap that we made just after making all-time highs in July. QQQ did close up 0.27%. VXN closed up 0.75%. And here we did stay completely within the implied move. And then IWM had the weakest, most choppy price action today, as well as the lowest volume. We did open down and then popped back up above the 35 EMA, couldn't hold it. And right here when Jerome Powell spoke, we did drop down and we filled the gap from last Friday. So the first support level right here, that is going to be support now at 218. let's call it 219. It's closer to 219. So we closed that gap and we bounced back up and we got above the 35 EMA. So as far as tradability today, this was not the most tradable thing, and unless you put on something like iron condors last Friday, then you probably got whipped around a little bit over here. And we did start the day with Stupid Willie supporting the bulls, and we did see that with that initial pull up. But look at this, at the end of the day, we did cross down, and even though we are making higher lows right here, that did break that bullish momentum for the moment at least. And IWM closed up 0.25%, RVX closed up 2.31%, and we did stay completely within the implied move here today. And lastly, DIA. We did open DIA with a gap down, and that took us back underneath the 35 EMA. And we saw the 35 EMA as resistance all day, except for in that last candle where we pulled back up and we closed that morning gap. And DIA did trade completely in the red, except for that very last candle right there. DIA did close up 0.04%, so essentially flat start to the week, and we did stay completely within the implied move here. And just note that we did bounce right above this FOMC rate cut gap. So that was a recap of today. Today was also the last day of September. It was the last day of the third quarter, and we are on to October and the last quarter of the year. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Leave me a comment if you have any questions at all. And if you want to support the growth of my channel, there's two easy ways to help out. You can either help financially, which there is a thank you button underneath the video. And if that's not something you can do, then another easy way to help out is to share this channel. Alright, so starting in SPY, tomorrow's implied move is between 570 and 578. That is from options. The 30-day average volatility is $3 wider in each direction, 567 to 581. And the implied move on Wednesday's contract is between 569 and 579. And to the upside, directly above us, we have all-time highs. We did make those last Thursday when we opened with that big gap up. And today we did close just a little bit underneath that after that big pop up after Powell spoke today. So today we closed at 573.76. All-time highs are just above that at 574.71. So if we get above that level, if that's not a resistance, then tomorrow, then the top of the implied move is at 578. And then the top of the implied move on Wednesday's contract is 579. And then to the downside, the first level to look for is going to be that 35 EMA. And today was our first sign of weakness where we did trade most of the day underneath the 35 EMA, except for that last candle. Jerome Powell once again interfering with natural market correction, and so the 35 EMA is underneath us. Then the bottom of the implied move for tomorrow is at 570 and 569 on Wednesday's contract. We have that 30-minute 200 moving average underneath us, still with a pretty strong momentum. And support basically lines up right with the bottom of the implied move on Wednesday's contract. And when we go over SPX in just a second here, this support level makes a little bit more sense. There's a gap in SPX that we don't see in SPY, but that is why we bounced there today. and that lines right up with 569. So then taking it over to SPX, the implied move over here for tomorrow is between 57.20 and 58.05. That is from options. 30-day average volatility is a little bit wider, 56.90 to 58.35. And the implied move on Wednesday's contract, 57.10 to 58.15. Right above us, we have all-time highs. We closed just a little bit underneath that. All-time highs are at 57, 67, 37. That is a pretty cool number. And then right above that, we have the next level is the top of the implied move at 58.05. 58.15 is the top of the implied move on Wednesday's contract. This looks like a beautiful spread setup if we do get up into the middle part or near the top of the implied move. That is definitely what I'm going to be looking to. And to the downside, the 35 EMA is underneath us. We have spent most of the month above the 35 EMA, and it has been a very steady support. So let's look back a little bit here. Look at that. Ever since we bounced on the 4-hour 200 moving average back on September 11th, we filled this gap right here, got back above the 35 EMA, and that has been holding us up for this entire rally. And today was the first day we even printed a red candle. Of course, we closed with that pop back above it after Powell spoke, and we are just underneath all-time highs, but we did see that first sign of weakness. And the 35 EMA is important every day, but because of this right here, extra important tomorrow. So that is underneath us and just above the bottom of the implied move at 57.20. And then 57.10 is the bottom of the implied move on Wednesday's contract. And just underneath that, we do have the next support level. There was a very small gap right here, and once it filled, it did become a support. So support right here, we saw that as support again today here, and that is just underneath the implied move for the next 2 days. And then we also have that 30-minute 200 moving average. I don't have it labeled today, but that's what it is. And then just underneath all of that, we do have the FOMC rate cut gap. So definitely not a difficult trading range. We're just underneath all-time highs, so we don't have a lot of resistance above us. And we're above that 35 EMA, so look to that as support until it's not. And then switching over to QQQ, the implied move tomorrow over here is between 483 and 493. That is from options. 30-day average volatility is quite a bit wider, 478 to 497. The implied move on Wednesday's contract, 482 to 494. And to the upside, the first level of resistance is going to be right here. This is where we saw Friday's highs, and that is just a little bit above 490, right between 490 and 491. And then above that, top of the implied move is 493. 494 is the top of the implied move on Wednesday's contract. And then above that, we have the rest of this bear gap. We made that bear gap back in July. Let me zoom back a little bit. Let me take it even one time frame further. So this was in July 17th right here. We actually made all-time highs right before that. And then a few days later, we gapped down. And this is the bear gap that we tried to get into last Thursday and got slapped back out of. That is on top of the implied move for the next 2 days. So if we do trade up, if we bounce here on the 35 EMA and also the 485 resistance that we've had for the past 3 months, then just know bears will be hiding on top of the implied move here. And then to the downside, we do have the 35 EMA. It has started to curl downwards. So the momentum is shifting a little bit. Then right underneath that, we do have that 485. I just showed where that is. That has been a resistance, a pretty strong resistance for the past 3 months. And as soon as we broke out above that, we got pushed back down, and now we're just a little bit above that. And then underneath that, the bottom of the implied move is at 483 and 482 on Wednesday's contract. And then that 30-minute 200 moving average is just underneath that in tomorrow's trading range. And underneath all of that, we do have this bull gap. This is from FOMC and the rate cut we just had, and our good friend 474. And then switching over to IWM, the implied move over here is between 218. I feel like we've been seeing that number a lot over here. 218 to 224. That is from options. The 30-day average volatility is a little bit wider, 216 to 225. And then the implied move on Wednesday's contract, 217 to 225. So 225 we do see twice up here. This is towards the bottom end of 225. This is actually 224.31 rounded up. And this right here is much closer to the actual value, 225. And to the upside, the first level to look for is going to be the resistance that we saw last Thursday. Was that last Thursday? No, this was last Friday's highs. And that is just under 223. And then above that, 224 is the top of the implied move. 225 is the top of the implied move on Wednesday's contract. And then at the very top of the trading range for tomorrow, we do have this resistance just a little bit above 225. And we saw that mid-September right here. That was the pop that we saw for FOMC. Before FOMC right here, and then we gapped back up, tried to get above it, and it was a resistance. So that is at the very top of the trading range. And then to the downside, we do have the 35 EMA, and that is pointing down. And just underneath that, we have our support right here where we filled this gap from last Friday. That did act as a support today. So that is at 218.76, so 219. Bottom of the implied move is 218. And then we have this other gap right here that was support. We had this gap right before FOMC. So in anticipation for FOMC, we had an up gap, and then we had an up gap after FOMC. And we did fill this one. We did fill this one as well, and now it is our support down near the implied move on Wednesday's contract, which is 217. And then 30-minute 200 moving average and 1 hour 200 moving average. So all of this support right here is making 218, 217 a good, attractive spread for bull put spreads if we do drop, at least on the day. And then lastly, DIA. The implied move over here on the week is actually 415 to 430, and then this is the 30-day average volatility, and that is between 418 and 428. And to the upside, the first level to look for if we hold this 35 EMA is going to be where we just made all-time highs last Friday. That is 426.20. And then 428 is the top of the 30-day average volatility. And then to the downside, we have the 35 EMA. And underneath that, we have support. I'm going to say right here at the top of the FOMC rate cut gap. So on the day and on the week, if we find ourselves down here, we have two FOMC rate cut gaps, one from before and one after. And these could act as buy levels. We definitely have some moving average support here as well. So quite a bit of support at the bottom of the trading range. And of course we can drop lower to that. We've got all kinds of levels underneath that, in my opinion, need to be retested. But because of this setup right here, I would expect a slowdown, maybe not a huge bounce, but something like some consolidation in this area. So there you have it, guys. Everything you need to know in tomorrow's trading ranges. Have fun, trade safe, make sure you take profits when you're up,